Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be talking about my options account, how that's been going, some big mistakes I've been making, and what I've been learning, some new strategies I've been trying, and just updating everyone on the progress of that account and how it's been going. I also want to say Merry Christmas to everyone, as this video will be coming out on Christmas Day. So first of all, starting out right here, looking at my Robinhood account, we can see right now it's around $5,201.18, which is, if any of you guys have been following along, this is significantly lower than it's been for probably around 6 months or so. So that's really unfortunate. Obviously, if we look over the past year, you can see we started out with around $5,000, and we are doing well, and we got all the way up to around 6,200, and then we have really had some problems here, and I'm going to talk about that. We're only really up about 3.94%, about 4% on the year. I started this account in February, so I'm really hoping we can at least stay positive above 0% by the time we get to this coming February. Obviously, I'm still learning, and that's a big process. But I would still like to at least be making a little bit of money. So the big problem here is this put over here I have on Draftkings at the $41 strike. You can see with this one, I'm down about $660. I have the $41 put. It's expiring this coming Thursday, which by the time the video comes out, it will already have been expired. And most likely I will be assigned the shares. I would say it's very likely. Right now the stock price is around $28.80, as you can see here. So that is way below the $41 strike, which is really unfortunate. That's why what has been dragging my account down mostly. I've also been getting into some credit spreads, some put credit spreads, and the main reason for that is that because of this DraftKings problems I've been having, I'm realizing even more that my account has been too focused in just a few companies, and I've been putting too much capital at risk in just a few companies. This $41 put has $4,100 worth of collateral behind it, but I can do this credit spread here on Salesforce, for example. It's at the $250 and $245 strike prices, and basically for that one, the capital at risk is essentially, in most cases, it's just going to be the difference between those two strikes. So it's just going to be $500. So that is definitely a way to risk less. There's definitely some nuance there because your options could get exercised early, in which case you would probably lose a little bit more money than the full 500, but that is a little bit rare for sure, but it is something to be aware of, I think. So with this option, Salesforce is around $253. This one doesn't expire till January 14th, but I am down a little bit on this one. Hopefully with Theta Decay and hopefully Salesforce will go up a little bit, I'll be able to get some profits on this one. And then the next trade I have on here is a put, just cash covered put on SoFi at the $11 strike, pretty much breaking even on this one. This one is also for the January 14th expiration date. I think I just sold this a few days ago, so it's pretty new. But we can look over the past month, down about 11% the past month, past 3 months down about 13.5%. So that's really unfortunate, but that's how it does go sometimes, and you live and you learn. So that's what we're doing right now. We're going to go over to the spreadsheet here and look at some of the trades I've done. So I last updated you guys around, if I recall correctly, November 19th or the 16th. It was somewhere around there. So at that time, I had already closed out, or actually I had not closed out, it looks like, this DraftKings put here. I was still in this first put at the $42 strike price. So basically what happened there, I sold it for $95 and I bought it back for $555, so a pretty big loss there. And I rolled it into this $41 put, which I got $580 worth of premium there. And obviously it's still open, expiring this coming week. I've also done a put on CLF, Cleveland Cliffs, right there, just a small profit. Sold it for about $33, bought it back for $15, so that's $18 of profit right there. I did a put on Rocket, which I rolled as well. It was going against me, so I rolled that one. I got $40 initially. I bought it back for $76, and then I rolled it out here and down strikes a little bit. I got $85 of premium this time and $42. So overall, if we pull up our calculator, The first time I got $40 and then I bought it back for 76. And then I got $85 for the second put and bought it back for 42. So that's an overall profit, only $7, but definitely better than nothing, I will say. And we also did a put credit spread on Palantir. This was my first credit spread, and I was just kind of learning with it. This one basically was the 19 and 1850 strike. So what you do is you sell a put at the higher strike price, and then you buy a put at a slightly lower strike price. So obviously you receive less premium, but you're also risking significantly less capital. So for this one, I got $50 of capital, which is risked, basically the 19 minus 18.5 strikes times 100, and I got $20 of premium. I actually paid $32 to buy it back. Had a little bit of a loss there, about $12. I should have waited a little bit longer because I bought it back towards the beginning of the day, and towards the end of the day Palantir went up a bunch, and I probably could have just about broken even on that one. And I tried doing some super small credit spreads on the Qs, and basically like one day to expiration, selling them in the afternoon, like 2 p.m., just to try to get a couple dollars there. And I think it would have worked well. The problem was that Robinhood basically classified them as quote unquote like high risk trades or something, and so they closed them out for me. So I got $8 and $9 here, but they closed them out when they were still at $6. So I only got like $2 and $3 of profits from these. But that's all right. That was just a little experiment, I guess. I don't think I'll really do that much. And then this Walmart credit spread I had here on the 135 and 130 strikes, which basically means I risked $500 of collateral. I only held it about 2 days. I sold it for 116 and bought it back for about $76. So that's a $40 profit there, which is super awesome. I was really excited about that one. And then I also had a PayPal credit spread that at the 180 and 175 strikes. I sold that one for 145 and bought it back for 98. Solid profit of around $47 there on that one. And then all these other trades we already talked about. They're open positions that I showed in the portfolio, the Salesforce credit spread and the SoFi Cash Secured Put. And so right now those have not expired or not been bought back. So I do want to talk about the Draftkings trade a little bit more. So this one, most likely, I think 99% chance that it's going to be exercised or be in the money this Friday or this Thursday when the markets do close for Christmas and Christmas Eve. So basically what will happen is I'll be assigned 100 shares at $41 per share. And if we want to calculate, what my break-even price at this point will be, we can do that. So originally I received $95 of premium, and then I bought it back for $555, and then I received an additional $580 for the second put that I sold. So that means I received $120 of premium, and if we divide that by 100, that's $1.20 per share. And if we subtract that from 41, then we get a break-even of 39. And we want to multiply by -1, which, okay, it's not letting me multiply by -1, but it's going to be $39.8 dollars per share, which is the break even. So basically at that point, I need the stock price to be above $39.80 before I break even. And the other thing I can do, which I will be doing, is selling covered calls. And basically what that will let me do is receive some more premium and hopefully lower my cost basis even more, so I can get closer to breaking even on this trade. This one has really tanked my account a little bit, and I'm not too happy about it, but it is a good learning opportunity. It's good that it happened when my account was only worth $5,000 instead of $100,000, and I lost $20,000 instead of 500 so far. So right now I'm not too worried about it at this point. I think in the long term it'll work out for me. You can see these are my records of every week. I keep track of the account value and the change, and then how much profit I'm realizing each week. So you can see going back this week of the 15th, I realized $18 of profit. The account was around $6,100, and then from there we basically moved down. This week is when I rolled the Draftkings put, which is why I had a realized profit of -$460, and then this week here I realized rolled the Rocket put, which is why I had a -$36 realized profits there. This week though, I should have a pretty high realized profit, since most likely the Draftkings put will get assigned. So in that case, that premium that I received from the $41 put of $580. That'll all be realized since I won't have to buy it back. And then this right here is, we can look at the month end of November. We are around $5,655 at the end of November, and we realized negative $457 in that month. I'm hoping this number here is around 500 to offset that. But overall, that's how the account is looking. Like I said, it's been a lot of negatives for me in the last month or two, and I'm not really happy with it, but I am happy that I'm learning and working on my strategies with options trading. It's definitely something that's a little bit tricky for me. I know a lot of people, or at least some people that I talk to online in Discord, have a lot of success with it. I think a lot of those people are a lot more educated than me about it. And that's just something that is taking time for me to learn new things and learn some of the nuances behind it. That is really what will make you or break you, I think, with options trading. So that's where I'm at. If you guys do have any tips in regards to credit spreads, maybe, which is something I'm going to be trying to be utilizing more and more moving forward to lower my risk per trade. And then also, if you guys have any suggestions for stocks that I can sell some puts on that most likely have some rather low share prices, so it doesn't take up too much capital, I would love to hear that as well. And if you guys just want to say anything else in the comments below, I would love to hear it. But I just want to thank you for sticking around to the end of the video, and I will see you in the next one. And also have a very Merry Christmas.